Let's bring in Malcolm Ethridge now of Capital Area Planning Group and NVIDIA shareholder Jason Snipe of Odyssey Capital Advisors. Both are CNBC contributors. Great to have you both. Jason, I'll go to you first because you're the shareholder here. What are your expectations going in? Are you concerned in any way?
No, I'm excited, Scott. I mean, one of the things that's super interesting to me, this stock has had 7 straight triple plays, beat on the top and the bottom line and raising of the guidance. You know, as Christina said, we're expecting 83% revenue growth year over year, a double on data centers, almost 100% growth year over year. So I think it is about the guide going forward. Again, the whispered number, as Christina mentioned, is $37 billion. I think they'll be above that number, which will be positive for the stock. And I think the market is really leaning into this because there has been obviously a little bit of digestion since the Trump blitz in the market. And I think going forward, this could be the next catalyst for the rest of the year. So I'm excited about the print. I think it'll be solid. And I think we'll see our 8th triple play for NVIDIA.
Yeah, let me just ask you about the whisper number, because, you know, whenever you talk about a whisper number, it means that expectations are incredibly high, right? You're not just able to reach the number set by the street. You've got to reach an even higher level, and they've been able to do that, right? As you said, the triple play, you beat on earns, you beat on revs, you beat on guide. But it shows you that the bar for this company remains especially high. Let's not forget, these stocks as a group have stopped trading like a monolith. This stock has extended itself from the others, which I would say makes the bar even higher.
100%, Scott. I mean, what's another interesting note, you know, if you remove them from the equal weight semiconductor index, you know, obviously NVIDIA is up 190+%. That index is actually down 4%. You see ASML, AMD, Lam Research, obviously down, not trading as well, clearly. So, yes, the bar is very high for this stock going forward. But, you know, when we've heard from all the hyperscalers throughout this year about the CapEx spent on AI compute, that's not slowing down. We continue to see that guide continue to raise in terms of spending. And all those beltways lead back to NVIDIA. So that's why I think this will be a strong quarter. And to Christina's point, I think the next quarter will be even stronger. So that's what we're excited about.
When you look at these stocks, Malcolm, you've de-mega capped yourself for the most part, right? You don't own NVIDIA. Yeah. I mean, you own Microsoft, but you're one of the few investors who actually come on our shows, and you don't own the whole basket. Why not?
Well, I think Jason and everyone else who's been on the network today has made a very strong bull case for why NVIDIA can continue to go to the moon, right? But I also think you have to consider, he just mentioned that all of the spending that's happening in the name, all the spending that's happening in the space from all the hyperscalers, some of that is going toward creating chips internally that'll compete with NVIDIA, right? So the moment that we get a headline from a Microsoft or whoever else that they've successfully created a chip that has the same level of compute power for half the price, it's more eco-friendly, blah, 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 there goes half potentially of NVIDIA's market share there.
How realistic is that to happen in any time soon?
I think it's very realistic. If you consider how much money is being spent by AMD in partnership with all of those hyperscalers we're talking about, you got Google on their roster, you got Microsoft on their roster, you got Amazon on their roster. All of those companies are working on separating themselves from being so dependent on NVIDIA, and NVIDIA is very dependent on 4 hyperscaler names.
Let me just interrupt the conversation for a moment. We do have some breaking news now on the sentencing of the founder of Archegos Capital. Our Steve Kovac has that for us. Steve, what do we learn?
Yeah, Scott, Bill Wong of Archegos, he has been sentenced to 18 years in prison. This just happened moments ago in New York, handed down by a judge. The prosecution was looking for 21 years in prison. He's only getting 18 here. And of course, the defense recommended no jail time on the idea that he would not be a repeat offender. There you see him walking into court earlier today, Scott. But 18 years in prison here for Bill Wong of Archegos. Scott.
All right, Steve, thank you. Appreciate the update there. That's Steve Kovac. Let's get back to our conversation, Malcolm. I mean, what I said earlier, these stocks are not trading as a group, as a monolith anymore. They've differentiated themselves. but how much of the results tonight are going to dictate how they trade from here forward?
Yeah, I don't know that everyone is going to pin the rest of the mega cap tech names to what NVIDIA does. It's pretty much a foregone conclusion among traders that NVIDIA is going to do well, right? The options market is giving it something like an 8% uptrend
8.5 either way.
So, well, realistically, looking at Taiwan Semi and everything else we can infer from what we've seen, the breadcrumbs we've seen to this point, the whisper number as you're talking about, is probably going to be to the upside. And that probably tells us that somewhere from a 144 price point today, after hours trading, we go north of 155. That to me is an extremely attractive exit point, not necessarily fully from the position, but a place to start trimming that position for folks who are literally just trading the momentum, not the people that are holding on to that name for dear life.
Jace, you have a sense of the same kind of question because you have Apple, you have Amazon, you have NVIDIA, as we said, you got Microsoft, you have Alphabet. What's riding on those stocks tonight?
Yeah, so I think Malcolm makes a great point, and you as well. I think they absolutely do not trade as a monolith. Every one of those companies has different idiosyncratic stories to them. And of course, I own most of them with the exception of Meta. And I do think going forward with this new administration, I think part of this story, the theme that's been playing out has been deregulation. And what's going to happen with the DOJ. Obviously, there was news earlier this week about Google and the decoupling of Chrome and what that potentially might look like for the stock. That's a Google story. There's other stories for the rest of them. So, but I do believe, as large language models continue to grow and we start to see the second derivative move of software and starting to see the use cases, and we've seen some of these software stocks move over the last couple of weeks, I do think the hyperscalers do well going forward because I just think that technology, AI is still the story. I don't necessarily think we'll see the growth that we've seen over the last 2 years, but I do think they deserve a mainstay piece in your portfolio going forward.
Malcolm, what about the rest of the market? The idea that if there's this new optimism around a new administration, deregulation, more deal making, stronger economic growth, that it's going to be better for cyclical stocks, that things that have worked are going to continue to work, industrials, financials, some of the other areas. What do you think?
I hear that argument. That kind of harkens back to that Trump trade, right? We talked immediately after the election, all the names that were going up in the right direction were based on the assumption that deregulation is going to be great for energy and healthcare and so forth and financials. But I think that more importantly, we need to look at individual names, right? A name that I'll give you that's going to be really important tonight for me personally is going to be Palo Alto, right? I think that Palo Alto is realistically going to have more upside next year, potentially more upside than NVIDIA will. I know that's a bold statement. I know you think I'm crazy to say it, but the reason that I say that is if you look at an administration that is extremely hostile to China, and you look at how much action there has been with China trying to penetrate our important infrastructure, from a cyber defense perspective, Palo Alto is going to be very important in helping to protect that. And I can imagine the federal budget has to increase exponentially. Palo Alto has the highest number of federal contracts right now. All of that annual recurring revenue that comes from the Fed is going to flow again to Palo Alto. So I think that's a more attractive story than a lot of the others that we're talking about from the incoming administration.
Jace, you're in this space. So you have Palo Alto too, don't you?
I do, and I love everything that Malcolm just said. In terms of the platform strategy that they've recently employed and moving from billings to the annual reoccurring revenue model, I think is going to be fantastic for the stock. It's up 31% year to date, and all this talk we're talking about AI and AI compute. I mean, cyber is absolutely going to play a significant role as it relates to all that CapEx is spending and those models continuing to grow. We need to protect these models. And yeah, I mean, the new wars we're fighting today are data wars, right? So cybersecurity continues to play a role there, and absolutely agree with the fact that there's space in the government business, and if government spending continues to move forward, Palo Alto will continue to take value and appreciate as a result.
Guys, we'll leave it there. I appreciate you very much. Jason, thank you. We'll see what NVIDIA delivers. Malcolm, I know we'll talk to you again soon, but it's good to see you here in person at Impact.
Yeah.
Malcolm Ethridge.